This afternoon, the Secretary General and Klaus Schwab, the founder of the World Economic Forum, will witness the signing of a memorandum of understanding on a strategic partnership between the UN and the World Economic Forum, which outlines areas of cooperation to deepen engagement between the two institutions and to jointly accelerate the implementation of the 2030 agenda.
New developments on First Republic. Sources telling our David Faber today the most likely outcome for the battered bank is to be taken into FDIC receivership. Shares tumbling on those headlines after being halted earlier in the session. You can see now down about 40%. And just within the last hour, the Federal Reserve released its report on the Silicon Valley bank collapse. Our senior economics reporter, Steve Leisman, is here with those details. Steve.
Yeah, Frank, the Fed's report on the failure of Silicon Valley Bank takes aim directly at the bank's management and the Fed's own bank supervisors, but it also suggests new regulations are going to be needed for mid-sized banks like SVB. The report said that SVB was a textbook case of mismanagement. It failed to manage basic interest rate and liquidity risk, and that the board of directors failed to oversee senior leadership. From the Fed's standpoint, Fed supervisors failed to take forceful enough action. They missed risk created by SVB's growth, including the fact that before the bank failed, it could have been downgraded or should have been downgraded, even though the downgrade discussion began in November. It demonstrates, the report said, a weakness in regulation and supervision, specifically regulatory standards that are too low. Fed's Vice Chair for Bank Supervision, Michael Barr, saying we need to develop a culture that empowers supervisors to act in the face of uncertainty. In the case of SVB, supervisors delayed action to gather more evidence, even as weaknesses were clear and growing. A couple other things the report said it would have to figure out. How do you respond, or what kind of capital levels are the right ones in a world where social media, technology, and a concentrated deposit base may have fundamentally changed the speed of bank runs? But overall, from an investment point of view, I'd say it makes clear some of the relaxations to regulatory standards from 2019 now likely to be rolled back. Frank?
Let's just kind of start with the banking mess, because the fate of First Republic hangs in the balance. When you hear these reports and know that in the case of Signature, the FDIC says, well, we had job openings we couldn't fill, basically. The Fed, when it comes to SVB, says, well, there were people in place, but they just needed to be empowered to do something more about it. And the result of this is probably going to be more regulation for some probably well-managed banks who think, what did we do to deserve this?
But did the Fed say that the real cause of all this was higher interest rates? The Fed kept interest rates so low for so long that a lot of these banks were basically reaching for yield. They were buying long-term treasuries. They were lending money for mortgages at very, very low rates just to earn some money. And then the Fed started raising rates, and they started raising rates very aggressively. In my opinion, they've already gone too high.
Yeah.
But I think this is what really caused the banking crisis. Now you have people pulling money out of the regional banks to go into the big banks. I'm afraid that one day we're going to end up with only a handful of big banks in this country. And on top of that, people are pulling money out just to go into Treasury securities. Yourself being one of you're part of the problem here, right? We talked about T-bill and chill. That was the joke for a few months until it basically took down the banking system, right? And the irony is it's high-yielding U.S. government securities that are causing this deposit hole and a funding problem for a lot of these banks. Yeah, the Fed has caused the crisis by raising interest rates, but on the other hand, they've given us a great place to park money in very safe securities for some period of time and earn a great rate of return. So, I would like to see the Fed take a little bit more responsibility for causing the banking crisis.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, it looks like we have another one that bites the dust. First Republic. And guys, I brought you the FDIC video. You heard it out their own mouth. They want these types of activities on Friday. And guys, who's causing these banking collapses? That's right, the Fed. We know they caused the problem, wait for the reaction, and run in with the solution. And now they're coming in to bring even more regulation. And we have the Fed investigating themselves. We have former Ripple's lawyer, Michael Barr. And we know he's there to help collapse these small banks. So then therefore, there are only a few banks left. And that's the NWO big banks. And we have Jerome in the house next week. And we know he's going to be raising rates again. And then, guys, we're going to pause so therefore they can allow this legacy market to fall to pieces. but we know they have to have distractions. We know they're the master magicians. And right now, that main distraction is the debt ceiling. And if you're part of my Patreon, guys, you know I send you news after news after news of other countries getting off the dollar and going to the yuan. So, guys, we can no longer in the United States spend the same way we were spending. And that's the reason why this debt ceiling is so important. So the Democrats and Republicans have to get us moved over to the fourth industrial revolution. And how do they do it? That's right, playing the Hegelian dialectic. And we know the NWO has a solution. Tokenization and blockchain is going to bring in hyper-deflation along with automation, the robots, algorithms, and drones, letting people sit at home and get free money. And if you have my NWO book, I tell you that corporations are going to be your new government. Don't forget who funded crypto from the beginning. The big banks and big corporations. So guys, you're going to have the same companies, MasterCard, Visa, American Express, BlackRock, Goldman Sachs, Vanguard. And then, of course, your Microsoft, Google, Apple, Amazon, to name a few. And we see them all embedded in the emerging markets in China. So you're witnessing the fall of America to Babylon along with the United States world reserve currency and the rise of the emerging markets led by China with that digital yuan backed by that digital SDR. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Well, there has not been a dissent.
One and done, huh?
Well, I mean, there's not been a dissent for almost a year and a half at the Fed, which I found remarkable during one of the most tumultuous monetary periods in history, that you would not have opinions one way or the other. It's just like everyone falls in line, nodding their head on what Chairman Powell does. I would like to see some independence here. So I'm rooting for Austin to say, hey, I think we can stop now and not get a quarter point. I mean, it's mostly just a statement. Hey, I'm not going to go with the crowd 100% of the time the way everyone has for almost all of Powell's tenure. It's going to accelerate bank, leaving the bank, because now, if you can get 5 1/4 on treasuries, it's more reason to leave the bank. So, listen, I think the whole story about if they pause, they're going to reignite inflationary expectations and people are going to say we're off to the races. I mean, I think that story is really stale right now. I mean, when you take a look at the trends, I think that Powell worrying about that is frankly, very outdated.
Well, on the S&P, you expect another leg higher, or are we headed back down?
I think earnings. I think earnings are good. I think these past earnings, we're getting back to beat ratios that are at or above that. The guidance hasn't been, bad. I mean, I do recognize that just yesterday Amazon kind of reversed a big up, saying I do see that slowdown. I think the markets. If I think Powell says there's more work to do, and by the way, I don't think the inflation figures are going to be all that great over the next few days. So he's going to have ammunition if he wants to do it. But I think, again, I think they're backward looking. But nonetheless, if he thinks there may be, more to do, I think that's going to discourage the market and probably prevent it. If he really says we can pause and look, we might break that range that Mike, talked about a few minutes ago.
Yeah, so a couple of things. First, let me start, Joe, with something that's really important and it's lost in this conversation. Your viewers should understand, I'm sure many do, there's pretty much a 0% chance that the United States will fail to make a payment on any of our debt. There's not going to be a default on the debt. Even if the debt ceiling is not raised by the X date, ongoing tax revenue is about 8 times the amount of money needed to service our debt. We hear the administration talk about what a calamity it would be if we missed the payment on our debt, which is true. Why then would Janet Yellen choose to miss a payment on the debt? If we go past the X date, then there'll be vendors who won't get paid on time. It'll be like a partial government shutdown, which is not ideal. I hope that doesn't happen, but it's not the same thing. That argument is made by people who want to delegitimize the Republican position that this is a moment where we've got to begin to address the spending. Your point, I think, is exactly right. Kim Strauss's point is exactly right. If the House had not been able to pass anything, then Joe Biden's position of refusing to negotiate doesn't seem that unreasonable if your negotiating partner can't tell you what his position is. That's all changed now. Kevin McCarthy pulled off something that's very impressive. Honestly, early on, I didn't think he'd be able to. Getting virtually every Republican on board with a completely reasonable plan to at least address some of the excessive spending, I don't think it's tenable for Joe Biden to continue to say, I refuse to have a conversation about the very spending that's driving our deficits. I just don't think that's tenable. So I think the administration will realize that or come to that conclusion, and then they'll go to the table and something will get worked out, which will at least begin to address the out of control spending we've been living with. And the race will be all about Trump. And that's what a lot of Democrats want, both to give them a chance for Joe Biden to get reelected, which I think there's a very high risk of if Donald Trump is the nominee, but also all the down ballot damage that Donald Trump would inflict on Republicans in Senate and House races. So, yeah, I understand that.
So why would President Biden even consider negotiating it? That's my fear, is that he's going to. You saw yesterday there was no indication, no movement whatsoever from the press secretary or anyone else.
But as Republicans get out across the country and explain what they're trying to do here, their proposal that, my goodness, we take spending all the way back to where it was when? 2022. And then we let it grow, but modestly. Oh, and by the way, the young, able-bodied people with no dependents who are on welfare, we're going to ask them to work. These individual items in this plan are completely reasonable.
Well, Senator, you were there long enough to see what Senator Van Hollen, who I like, yesterday I saw him saying they want, oh man, that Republicans want to follow through on cutting law enforcement in this bill. So they want to defund the police, which they, as we know, Republicans are the ones that wanted to do that. And they also want to pull back on border security, which is also a big Republican plank. I mean, they say things with this great faith.
But Joe, you're laughing because it's not believable, right? American people will see through this. So they're trying to maintain this position that we're just not going to negotiate. By the way, as you know, every budget deal that's been struck in the last, 40 years has happened in the context of a debt ceiling increase. Yeah. And Joe Biden's been involved in those. This is ridiculous. This is a moment where something modest could get done. The House has put a completely reasonable proposal on the table. Frankly, I'd like to see Republican senators join them, go on record, make it clear to Chuck Schumer that he won't get the 60 votes for cloture on a clean debt ceiling increase that does nothing about our spending. That would also help bring those guys to
get ready for the next bull run, perhaps? So there are two sides to crypto, meaning that there is an investment. People buy and hold crypto, and people make that choice. And if they want to do that, we have no recommendation on whether they do one thing or the other. But what I'm really excited about is that the underlying technology and the power of that technology to help build a new set of financial applications on top of the underlying technology. That's what we're focused on. If the consumer wants to buy crypto or sell crypto, we want to provide safe way for people to use through MasterCard cards. So we do that. We have on-ramp services to go from fiat to crypto and for them to use MasterCard cards to spend. We don't move crypto in that process, but we make it very safe and easy for people to do through our partners. But what I'm really excited about is the next click of this, which is really the underlying technology and how it can help us build the next set of financial applications on top of this infrastructure. Now, even though we're in this downturn, you made many recent announcements, including 2 in October. One of those was called Crypto Source, and it's aimed at making things smoother between banks and crypto investors. And the other is called Crypto Secure, with the goal of making it easier and safer to buy crypto. So can you take us through those, and how is it going so far?
Yeah, no, so Crypto Source is really, again, about today we have centralized exchanges that are providing buy, sell, hold crypto. But we see traditional financial institutions also interested in participating in this use case, especially outside US. So that's why we made a Crypto Source product available. And the Crypto Secure is really about helping
financial institutions understand the other side of the players, the crypto players that they're dealing with, so that they can make transaction decisions using the risk scores that we provide. Ultimately, once you understand the space more, you can trust the space more. Once you are able to know what is a risky transaction versus not so risky transaction, you engage more. Ultimately, this kind of visibility and services provide the trust that is needed for more players to participate in this.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. Long COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.